Welcome to the Deep Dive. We sift through stacks of information to bring you the key insights. Today, we're digging into the latest from TJX Companies, the parent of TJ Maxx, Marshalls, Home Goods. We've got their Q2 Fiscal 2026 earnings call, info, and press release from August 20th, 2025, right here.
Wow.
So, our goal today, understand how TJX isn't just surviving, but actually really thriving in retail right now. We'll hit their recent numbers, look at what makes their business model tick, and see what they're planning next.
Yeah, and what's fascinating, is how that off-price model keeps delivering. It often gets called counter-cyclical, but it seems pretty consistent these days. We're aiming to give you a clear picture of this retail giant and why it still connects so well with shoppers, no matter the economic weather.
Okay, let's jump right in with those headline numbers. They were pretty impressive. TJX called it an outstanding second quarter. Consolidated comparable sales were up a strong 4%. That beat expectations and showed strength pretty much everywhere. Breaking it down a bit, net sales reached $14.4 billion for the quarter. That's a 7% bump over last year, and their pre-tax profit margin was 11.4%.
Which is solid, up 0.5% from last year.
Right. And importantly, almost a full percentage point, 90 basis points higher than their own top estimate.
That's significant headroom.
Yeah, and diluted earnings per share, $1.10, think. Up 15%, also way above what analysts expected.
And if you look underneath those big numbers, the really key thing, I think, is that customer traffic, actual transactions were up. Not just overall, but at every single one of their divisions.
Every single one. Right.
That tells you something, doesn't it? It shows really healthy, broad engagement with what they offer. People are actively choosing to shop there.
Those are definitely strong results, especially now. But the how is what always gets me with TJX. How do they keep doing this? They point to consumers wanting excellent values in brands and their basic off-price business fundamentals. Seems simple, but...
Well, it's rooted in that flexible off-price business model, as they call it. It's incredibly resilient. It almost feeds on market fluctuations that hurt other retailers.
Right, like excess inventory elsewhere is basically an opportunity for them.
Exactly. They turn that into the treasure people find. So it's not just about being tough. It's almost built to benefit from inefficiency elsewhere.
And this lets them offer that good, better, best mix, right? Hitting different price points.
Precisely, which broadens their appeal. They specifically mention strength across all income groups shopping in their stores.
And getting younger shoppers, too, they said. That's crucial for the long haul.
Absolutely.
This flexibility, it also fuels that whole treasure hunt thing people talk about.
The discovery aspect.
Yeah, makes the stores a place you go year-round, maybe looking for gifts, maybe just seeing what's new. They even mentioned being more top of mind now for consumables and gifts. I saw an analyst note that their Home Goods Perfect College setup was, quote, honestly stunning.
Ah, interesting.
Yeah, showing they're really good at that in-store presentation, making you want to pick up more than you planned.
That treasure hunt idea is powerful.
Yeah.
But it does make you wonder, right? In this age of instant online gratification and endless choice, how does that deliberate unpredictability keep working so well against, say, Amazon? Is relying so much on the physical store visit a long-term risk, or is that precisely their edge?
Good question. Okay, let's look at that 4% comp sales growth across the divisions, because it really was broad-based. So Marmaxx, that's TJ Maxx, Marceris, saw a solid 3% comp growth, driven by people buying more per trip and more people coming in, both factors.
Healthy combination.
Home Goods did even better, up an impressive 5%. Seems their eclectic assortment is really hitting the mark.
Home trends are definitely helping there, I'd imagine.
Absolutely. And internationally, TJX Canada was kind of off the charts, up 9% comp sales.
9%? Wow.
Yeah, they credit extremely high brand awareness and customer loyalty up there.
That makes sense.
And TJX International, so Europe and Australia, reported a strong 5% increase overall. They said Europe was particularly strong and Australia had outstanding sales.
That consistency across different continents is really something. It underlines just how well that off-price concept travels. But does it raise any questions for you? Are there specific spots where maybe it's tougher, or does the model just smooth everything out? Any wrinkles you noticed?
That's a fair point. For now, the numbers look smooth, which brings us to financials again, specifically margins. Maybe the most impressive thing this quarter. Their merchandise margin was flat compared to last year.
Despite higher tariff costs.
Exactly, despite those higher tariffs. So how they pull that off? What does it say about their agility?
Well, they talked about mitigation strategies. It sounds like they're actively managing it.
Yeah, and their pricing isn't some top-down command. Their buyers literally look at competitor out-the-door pricing what you actually pay.
Right.
And then they work backward from there to make sure TJX is always the best value proposition.
So they're reacting constantly to the market price.
Seems like it. Plus, they leverage those outstanding buying opportunities, grabbing excess inventory when it pops up. Combine that with smart markdown management and these planning teams that, get this, turn our stores roughly once a month.
Once a month, that's incredibly fast inventory turnover.
Keeps things fresh, manages risk. So, looking forward, they sound pretty bullish. They've raised their full-year guidance. Pre-tax profit margin now expected 11.4% to 11.5%.
Yeah.
And diluted EPS guidance is up too, now $4.52 to $4.57. That's like a 6% to 7% increase projected for the year.
So they're confident they can maintain this momentum.
Yeah, they even said Q3 started strong, and they're aiming to beat these new higher plans.
You know, it really highlights their buying power when you hear about other retailers struggling with tariffs, supply chains. TJX has this huge global machine. Was it over 1,300 buyers?
Sourcing from 21,000 vendors in over 100 countries.
That scale, that network, it's just a massive competitive advantage, isn't it? It lets them navigate these issues, maybe even benefit from them in ways others just can't. It's a real moat.
Definitely seems like it. And they're not just focused on the next quarter. They have a longer view, too. They talk about a long runway ahead to capture additional market share worldwide. They think there's still lots of room to grow.
Where are they seeing that growth?
Well, significant store growth potential. They think they can add another 1,800-plus stores just in the countries they're already in, plus Spain.
1,800 more stores.
Yeah,
Wow.
Yeah, and they see opportunities in Mexico and the Middle East, too. This year alone, they're on track for over 130 net new stores.
They're still betting big on physical retail then.
Seems so.
Yeah.
And they're also investing in existing stores, planning nearly 500 remodels this year. They want that consistent shopping experience, even in older locations. Keep things fresh.
Makes sense. Gotta maintain the fleet.
And one last piece they really emphasize is their people, the longevity and knowledge of our talent. Their management teams have, deep, decades-long off-price experience.
That institutional knowledge is hard to replicate.
Right. And they invest in training, like TJX University, building a strong internal culture. They see that as a major differentiator.
So it's interesting, you connect that focus on physical stores, constant remodels, and deep internal expertise. It really shows a belief in the power of, well, people and places, even as everything seems to go digital. But it does make me circle back to that earlier thought. How does that very physical treasure hunt model evolve? Will that experience alone keep drawing people into stores 5-10 years down the line, especially younger shoppers raised on digital? Or will they need to integrate digital more deeply into that hunt?
That's the big question for the future, isn't it? Okay, so let's recap. We've dug into TJX's really strong Q2. We saw that deep commitment to value, that incredibly agile model, and how they focus relentlessly on the customer, especially that in-store experience.
Yeah.
The consistency is striking, really. Strength across all divisions, navigating challenges like tariffs. It shows a company that's really mastered its niche.
They certainly have. It leaves you, the listener, with something interesting to chew on, I think. In a world where shoppers want both value, like real savings, and something more, an engaging experience, what lessons can other retailers really learn from TJX? Not just discounters, but maybe even premium brands or pure online players. How can they borrow from that treasure hunt magic that appeal across demographics, especially younger ones? How might that blend of value and experience shape where retail goes next, moving beyond just a race to the bottom on price?